All right. Good morning, everybody.
Good morning.
Good morning.
Morning.
Hello, and welcome to the webinar, Preparing for a Farm Loan. My name is Kelly Henwood, and I am the Regional Small Farms Coordinator for Washington State University Extension. This webinar is funded by the USDA Rural Business Development Grant Program. So before we begin, I just wanted to share a couple of Zoom housekeeping tips for you all. If you have any questions throughout the webinar, please utilize the Q&A function at the bottom of your screen, or if you're on a smartphone, I believe you have to swipe or it's on the side. And we will do our best to address your questions either throughout the webinar or at the very end. So after the webinar is over, a resource list with helpful links and tips, as well as an evaluation and the webinar recording, will be sent to everyone who's registered for this webinar. So before I turn it over to our moderator, Mark Bowman, I wanted to introduce our guest panelists. In her role as Senior Business Lender and Team Manager, Erika Lindholm from Craft 3 sources and originates commercial loans in the Olympic Peninsula region, as well as supervises and supports a team of lenders in other rural parts of Craft 3's Washington and Oregon footprint. Craft 3 has a strategic focus on food and ag businesses, and Erika also serves on the board of directors of the North Olympic Land Trust. Craft 3 is a partner in the Jefferson LandWorks Collaborative, whose mission is to keep working lands viable. Ransom Satterley with the USDA Farm Service Agency, her role is a loan officer for FSA. FSA provides information about loan programs. She reviews and processes loan applications, works with farmers, ranchers, and agriculture lenders to finance operating costs, equipment, and real estate purchases for farms in the greater Spokane region. So Mark, do you want to get us started?
I will. Thank you, Kelly. Thanks for the introduction. And I'm your host today of today's topic, which is looking at the purchase of farmland as a farmer and some of the things, some tips for you and information from a lender's perspective of what they're looking for, both in the management of your existing business, potential documentation that they would need in their loan application, and also some ideas of things that issues that arise around properties that you're looking at. So this is all from the lender's perspective. So welcome, Ransom, and welcome, Erika. Are you ready to get started?
Sure thing.
Yes.
All right.
Thanks for that intro.
Yeah. All right, so let's get started. So we have an hour here, and I'm going to keep everybody on track and on time, and we will finish at 11, and I think we will cover everything that we want to cover. All right, so let's get started. So Ransom, I'm going to start with you. First question. So as a loan officer, potentially lending to a farmer who's looking to buy land, what do you look for in the management of the existing owner and the business? So not so much the information that you need to gather from them for the application, but what sort of key characteristics and what things are you looking for in successful manager and their business?
Yeah, so for the Farm Service Agency, purchasing land is, it has the most eligibility requirements, and the applicant must meet all of these. They're usually more than the other loan types that we have. And so we're looking for 2 to 3 years of production and management experience. And the way that's usually verified are through tax returns, profit loss statements, sales records, or any other information from previous years. And I say 2 to 3 years because one of those years can be counted toward that 3-year requirement if you have a degree in agriculture, military experience, other business experience in general. We just want to make sure that you understand how to operate a farm like on a day-to-day basis. And so FSA is looking for farmers that kind of already know how to farm already. And the program in general is not meant for those with like no previous farming experience at all. We have had applicants in the past who worked for their family's farm, and so maybe they don't have personal production or financial records. And in those cases, usually a signed written affidavit provided by a third party, their employer, family member, anyone who isn't applying for the loan can provide this affidavit, and that usually validates their experience enough to get a land loan, even if they don't have the full 3 years of personal history. And so, yeah, we're mostly looking for someone who already knows how to operate the day-to-day of a farm, essentially. And we have various ways that we kind of validate that, other than you know, the Schedule F tax returns and sales records and things.
Yeah, good. So Erika, so following up on that, you know, when you're looking at the owner, the manager that's potentially looking at the land, along that same line of questions, what are some of the characteristics you're looking for in that manager or that owner of the existing business? And what are some of the things when you peer into their existing farming business that you really see as good characteristics that make you say, oh, this is the type of person that's really ready to own farmland?
Yeah, thanks for the question. And yeah, while I really first and foremost look to, I prefer to lend to people who recognize that they don't know everything, that they have more to learn, and that they have the experience. You know, certainly Craft3 can lend to startups, but even just experience in the industry. So this could be their first farm per se, but they would need to have experience in farming to have it make sense. But as far as personal characteristics, yeah, the recognizing that they may not have just themselves, just their experience in farming is maybe not enough to run their own operation and own their own operation, that they should be consulting, if not partnering with other folks that are going to also help them manage the finances of their business, because it is a business, not you know, just a farming business. And so having thought through the elements of what they're about to embark on and the partners that they need, and not assuming that they are going to be able to do everything is probably it in a nutshell. I could go on, but I'll end there for now.
Well, that's an interesting point you bring up, Erika, because again, I have a lending background too, like both Ransom and Erika do, is that when we look at a farmer who wants to purchase land, we know that we don't all know everything. We have our strengths and we have our weaknesses. So it really is, we need a team. We need a team around us of and this is not just the on-farm team, but this is the team that supports the business, right?
Exactly.
So who are some of those, so Ransom, who are some of those other key partners that you're looking for, you know, bookkeeping, insurance, attorneys, what are those, go through some of that list that you're looking for that really supports and makes a farmer stronger.
Mm-hmm.
Yeah, so I think it's helpful to have, you know, a team around you, or like, you know, some version could be informal. I know a lot of farms in my area specifically have a CPA or their own personal accountant who does the books and their taxes come tax time. And I think that's like probably a good place to start if you have a business or you want to get into farming, because you can have QuickBooks, do it yourself, but a CPA or accountant will know what to categorize certain expenses so that it all gets deducted as a business expense rather than, you know, personally buying something. And so a CPA or accountant, I can't really say on the farm production side of things, because we're looking for folks who already kind of know what they want to produce and how to do that. And so often they have family who also produces that crop. And so we see a lot of family help in our area, and just going to like a farmer co-op and networking if you don't have family, making friends who also want to farm what you want to produce can help. Just growing your network in general, other than that accountant, I think can help, but we are looking for folks who can mostly do the work independently, at least the farming side of it.
Yeah, Erika, follow up on that.
Yeah, I think that's all good advice. I do think you hinted to it. I think having somebody that you're connected to or that you've contacted about your insurance needs, which are going to be very different on top of once you own a farm, than just having been, leasing. There's a bigger insurance puzzle to put together. And so having that person involved, Ransom mentioned the accountant, and having somebody that not just does your taxes at the end of the year, but is helping you look at your financials as you're, going throughout the year, so that you can evaluate what's working, what's not, and pivot. And then, I think it's certainly not, and so the other, I'd like to see that my applicants have engaged WSU Extension on our network with those groups, because that says to me that they're wanting to continue to learn. And then lastly, what's not necessarily required right away, but what I really advise is them to be thinking about engaging a financial planner or somebody, who's even just somebody to think about the end game for them with their farm, because you can't start thinking about that too early, because just especially in agriculture production, I think with so much of your value and your what you're building in it lying in your property, it's a complicated thing to think about exiting that business at the end. So thinking those things through early.
So I know Kelly's writing an answer to a question. I'm going to follow up on that question here in a moment because it pertains. But a couple of other points I wanted to make along that line is think about maybe small business advisors.
Right.
Think about you're finding an insurance agent to help you with all the various components of a policy that you may need. Insurance can get very confusing very fast, especially when you're a landowner and you got to have insurance as one of the requirements for financing. And so they're really important. Human resources is important if you plan on hiring labor. So either your bookkeeper and accountant can do that, or human resource software or online thing that helps pay labor and all that kind of stuff. So the team is there to support you and make you successful. And so one of the questions that came up is, can you provide suggestions on how to find CPAs, accountants, attorneys that are familiar with farm operations? I'll just quickly say, probably for me, if I'm looking to find those type of folks, first place I'll go to is successful farmers around me that are doing the same thing I'm doing. I may go to them and say, hey, who's your accountant? Who's your attorney? Who's your insurance agent? That's probably the first place I would start. I had a gentleman the other day just say, hey, I've got some water issues up where I'm at. I need an attorney. And I thought, the first place I'm going to check is with the conservation district, because they deal with a lot of water issues.
Right.
So I checked out to him, hey, who would you recommend for this gentleman as an attorney? And so So looking at your resources around you. Any follow-up on that before we move on to the next question?
No, I just want to thank you for bringing up attorney too. Of course, we, we would want you, it's not a requirement on our side, but we feel a lot better when, especially when you're making a large investment like in property, that our borrowers have, hired an attorney to evaluate the transaction and hopefully talk to them about broader pictures. They can also sometimes be good guides for your financial planning as well. So.
All right, so let's move on to the next question. I'm going to go to number 3 first, because I think it pertains before I ask number 2. So what information do you want to see about a farmer's existing business? So when you're at saying, Ransom, you brought up a couple of years of financials. Tell me what is that? What are the documents that you're looking for?
Yeah, so the majority of the information that we need is obtained with all of the paperwork that comes with FSA's loan application. And so we have a form to explain like your farming experience and your background, education, actual working experience. We request like a 3-year history of both production and financials on separate forms.
Right.
And then we usually ask for at least last year's tax returns, both personal and business, if they're separated. And then if they're going to buy land, then the full 3 years of tax returns, any profit and loss statements that they have of their business. We get most of that as a part of the application process. And so when someone calls and asks us to apply, we send them the full application package with all the paperwork they need, along with like a general list of everything for a completed application, because we don't really start working with them until we get a full application and all of the information we need is right there.
Okay. Erika, thoughts on that?
So specifically with related to historical, the farmers' historical operations, we'd want to see not just the Schedule F, like but hopefully internal prepared, financials, a balance sheet, and P&L for at least 2 years historical. We will eventually need 3 years if the loan is more than 250, which when you're buying land, it's going to likely be that, but depending on what you're looking at. But yeah, so and then yes, we would ask for things about their operations, about the production, their successful, what they've harvested and what the yields have been, that kind of thing. But so that's the actual documentation as far as historical, looking back. I will also ask questions about, their staffing and how they've handled, how their seasons have gone in the past and what what the challenges have been and what they've had to overcome, what are markets that they've explored, so getting an understanding of how they have managed the challenges of operating a farm historically and what their resilience is.
Just providing some detail to that. So when you're looking at a profit and loss statements, so what that means, you're looking at income and expenses as and the net income that's on the profit and loss statements. You're looking at the balance sheet, which is what they own and what they owe and their net worth at the end. And some of the things you guys have talked about is your markets. Where are you selling your product? How are you selling your products? Is it wholesale? Is it retail? Has it been consistent? Are they performing? Are they, is your markets growing? Have you added any new marketing techniques or, that sort of thing? So all of that is part of the narrative that goes into telling the story, right, of who they are and their successfulness, right?
That's exactly right.
Yeah.
Exactly right. Because just so people know, the lender working with you is wanting to be your advocate to a group. They have to convince, to get your loan approved, they have to convince a bigger group typically. I mean, I don't know, Ransom, I don't want to speak for you, but I have a little bit amount of my own lending authority, but most, when we're talking about farm land acquisition, it's typically going to be a loan of a size that I can't approve by myself. So I need to tell a story and be your advocate. So as to why Craft 3 should invest in this business enterprise.
One question that comes up, and this is a question because I always go back and forth on it, and I come from a little bit of an older school of farming, and it's cash versus accrual accounting. So when somebody's preparing, I've come back, in the years that I was financing, it's been a lot of cash accounting. And what do you see, and what do you prefer in your finances, or does it matter because you can switch back and forth between cash and accrual?
Right. Ransom, do you want to?
Yeah, I mean, we can work with any kind of production record or financial record that someone has put together, be it either one. It helps to know that information when they apply.
Right.
But yeah, either method works. And with cash specifically, I know it's kind of harder to keep track of that, but just having a ledger where they, if they need to write things down, that could still work as a submitted record for us. So there's no preference really, just however you actually get to do it is usually good enough for FSA.
Yeah, and I would say the same. As long as we know what's being used, unfortunately, there's often a little bit there, and this is when you don't have a CPA. Sometimes you kind of mix and match, when you've got both cash and accrual going on, and it's that's not helpful. That can be very problematic, but we will always be looking ultimately at the cash flow of the business, and that that's why we ask for both the balance sheet and the profit and loss, because from that we can generate what has historically happened cash flow wise, and we will look at your cash flow projections, so ultimately it doesn't really matter as long as it's consistently applied.
Yeah, I would say, I think what I would bring up to farmers who are making that decision is, first of all, work with your accountant, CPA, and some of it depends on also the type of farming business. If you got accounts, a lot of receivables, you got a lot of inventory carried over. If you're buying hay at one point but feeding it out throughout a whole year, the whole idea of keeping expenses and deferring income from one year to the other. It really a lot of it depends on the type of farming business you have.
Very good.
And, so I would say, make sure you sit down with your CPA and accountant and really figure that out on the front end for your business and what works.
Exactly.
So
good advice.
That's where I would start with that. Okay. Let's go on to the next question here. So let's talk about projections are important. So now that we've looked at, you've gathered the information from the existing business, and they've given you that based on what the land that they're currently farming and the current size of their operation. Now they want to take on a piece of property and maybe bigger than their existing lease piece, or maybe they're keeping their lease land and adding this. So acreage can change, size of the operation can change. What do you want to see in these projections that you receive, that you're asking for on this new property? Erika, I'll start with you on this.
Okay. Well, I guess it does sort of depend on what situation you've started from and are moving to. But in general, to just boil it all down, the cash flow projections we want them to incorporate not just related to that specific property, but everything that's going on in your business. So they need to be projections for your business with the addition of the new property and the production that will result in, and revenue and expenses associated. So, and we want to see that those projections have you eventually covering the debt service of the loan that you're applying for. It doesn't. One thing I want to emphasize is that, especially in ag, there's going to be a lot of cash outlay before there's any revenue associated. So it's real important to be realistic on so first of all, those projections should be month by month for, at least 18 months. We typically, they should be month by month for at least 18 months. And then, we will ask for 2 years that they can be consolidated of total projections. But we want you to have thought through the costs that will be coming up front, that before you start coming in with your revenue and when things start being stabilized and revenue and expenses being more evenly matched, that you therefore will have negative numbers probably at the bottom of that cash flow projection. That you add that all up, and that's sort of the working capital that you need. And we want to hear what your plan is for that working capital need. Is that maybe it means you have to request a loan a little bit larger than what you're asking for just the purchase of the property? Or do you have the cash reserves to handle that expense? What is your plan? So, yeah, I'll end there for now. Sorry.
Okay.
Yeah.
All right. Ransom, some other thoughts along that line?
Yeah, so for FSA, with every loan application, we do request a projected budget for the year ahead. If you were to apply right now, it'd be for 2022, with the assumption, kind of like Craft 3, that you have this land now and it's been a part of your farming operation. So the 22 year would have what they operate already along with the new land and that crop. And for us, when we are looking at projected yields and things, it's important to have realistic outcomes, like she was saying, and reasonable expectations with that commodity type. And so if you were to apply to buy land, similarly, we have to show that your farm income will at least be equal to the loan installment on that loan. Now, they don't necessarily have to cover the new loan payment with the new land on its own. Like, as long as they generate enough farm income to cover their debt service, that's usually good for FSA. And generally, if you don't have any experience with the new commodity on this land, we like to see like enterprise budgets. So from WSU or another university, those are generally on the conservative side, but that's better for projecting than trying to assume that you'll, break through a new market and get a very high price where other people are selling for a lot less. Right. So enterprise budgets, your own personal history with that commodity. And so, yeah, usually we get all that information with an FSA form at the start as well.
One thing I'll add to that is when farmers ask me and they're preparing budgets and stuff, and I'll say, be realistic in your budget. Don't be, don't show me too high of income numbers. be realistic with a hint of conservatism built into it as far as your numbers. Don't undersell your expenses because they're usually higher than you think they are, and don't get too crazy on your yields or your prices on your products. Be conservative. And if I see too much profitability too soon in projections, that throws me up as red flags as fast as anything, because usually there's losses for a while, and that's okay.
I mean, I think there's this big myth that lenders want to see, like, we're going to like it that you show us lots of profit from the beginning, but that's not the case. In fact, that's exactly the opposite, because we've been down the road with a lot of borrowers historically, and we've never seen that, or it's very, very, very rare.
Very rare.
Yeah.
Very rare. Yeah.
So rather just be, realistic from the get-go, and then we problem solve together,
Exactly. Well, the other thing that comes with this that we need to talk about too is when you're adding land, so the assumption is your farm is going to get bigger. Your crops, you're either going to add some new product lines, or you're going to add volume. So the other thing is, it's pretty doubtful that your existing market base is going to be able to handle all the additional product that's going to come off.
Right.
So what are the new markets?
Exactly.
Who are the new buyers?
Right.
Where are they? Do you have contracts with them? Do you have commitments from them? So all of those sort of things, have to be in there.
Exactly. And so you asked specifically about projections per se, so I was answering to that, but the other part of that is those projections need to tie to a narrative in your business plan that explain how you're going to reach those new markets, or what those new markets are and how you're going to reach them, and so that I can believe the numbers and understand the numbers that you're providing.
Mm-hmm. Ransom, anything else you want to add to that topic?
Other than they're usually, enterprise budgets are usually good. We usually use those if they provide something that's unrealistic. So it's good if you're starting out to kind of look at the enterprise budgets to start, like not even your own budget first, like look at enterprise budgets to see what type of operation you would want to get into in the start, I guess, as a just starting out thought. Good place.
All right. Let's move on to a little bit different topic. Let's talk about the land itself. This is always a fun topic, and this topic never gets talked about enough. We always end up talking about the owner and their ability to their existing business and transitioning, and we always look at what their existing financials are and what their projections are. But we are financing two things. We're financing an individual's ability to work on this land, but we are also financing the land. And the land, a lot of times, can come with its own issues that need to be overcome. So what are some property issues that you see when you're two components come up? One is, you're working with this landowner or this individual farmer ready to purchase the land, but you also got to make sure that the land meets your criteria, meets the farmer's criteria and their abilities. So what are some of the things that you find are issues or things that need to be addressed regarding land when you're going through this process? Who wants to start on that one? Ransom?
Want to start, Erika, or I can start?
Go ahead.
Go ahead, Ransom. I'm sorry.
Yeah, no, you're good. We don't see too many issues with land itself because FSA, we can do bare land. You don't need to have a house or outbuildings on it. And I know a lot of lenders don't do just bare land, but we do. And so what FSA is making sure is that because it's federally funded, there's no environmental concerns on the property you're buying. So By that, I mean, it can't have been a landfill. It can't have been used to get oil. It couldn't have been a gas station at one point. It couldn't have been used for like crop dusting, aerial services. Usually those aren't an issue. The other thing is if there's a lot of like trash or spare tires or just random farm equipment around, we do ask that as a part of the loan closing that you like amend those, like if there's a trash heap, to get rid of it. Other issues that we run into for land is actually clear ownership. There's been a couple times where the purchase sale agreement itself wasn't made with the right party. Like the seller thought they were able to sell this land, but they really can't because, you know, they're not the executor of the estate, or, you know, things like that can come up, but we don't really find that out until we request a title report. And so that's kind of further into the process, and there's not much you can do to mitigate those issues because they're just a part of establishing like a clear lien to the property, and that's kind of the lender's job. So all of these things, they don't come up too often for FSA. I will say like clear boundary lines are important because we need an established legal description before we can even order an appraisal. And with an appraisal specifically, a lot of times we have like a per acre value that's determined in an appraisal. And if the purchase price is larger than what the appraisal says the land is valued for, we can only provide a loan for what the appraisal says. So in those cases, if it's larger than, or if it's smaller than the purchase price, the borrower has to come up with that difference. They can use outside financing or their own cash, but they would need to make up that difference.
Right.
All right, Erika.
Yeah, so I guess, yeah, there's two, I mean, Ransom's already sort of described how there's sort of two buckets that these issues fall into. One's physical and one's like the legal. Yeah. And yeah, issues that, you know, we have bumped into, or that, and that I would look for is that an understanding of, you know, or that the farmer knows the conditions of where they plan to invest their infrastructure, put their infrastructure on the property. You know, is that is there any, I can't even remember what they call it, but the part of a land that might be, you can't, the zoning doesn't allow you to build there because it's too close to a creek or you know, you know, and so you want to definitely investigate the zoning for any, especially if you're going to invest in in infrastructure building on the site, to make sure what your plans are going to work within certain setback requirements and that kind of thing. And not only zoning, but then any overlaying easements that will come up with the title report often, and topographical things like that. I wish I'm just blanking on the name. I want to call it hazard, or I have some on my property where there's a creek and I can't build 50 feet within where it starts to setbacks
or critical
areas. That's what it's called. Yeah, exactly. So those kinds of things you want to evaluate before you commit, and we'll be sort of double checking you to make sure that you've thought through those things with what you plan to do, because it can really kind of throw a wrench in your overall production plan if you have to put the barn somewhere where you had planned to put crops or something like that, and then maybe where you wanted to put the barn is not the best soils or something like that. So understanding,
or if you have a setback from a creek and that reduces the number of acres you can farm, or where you put your fence lines, or you have to put up fence lines to protect this critical area or this wetland, or
Right.
making sure you understand those requirements.
Exactly.
So physical part of the land, here's a number of the things. So I'll just add to it a number of things I see. Underground tanks,
Yes.
you know, farm gas tanks, either below ground or above ground. I find that to be an issue, and making sure you understand where they are, what their condition is. Do they need to be removed? Are they safe? Or are they leaking? Are they active or not? Are they registered? Are they not?
Right.
These are all things, right?
Exactly. Fortunately, I mean, that's why we will, get environmental, we call it an environmental assessment of the property, but not always. I mean, fortunately, I haven't had it happen to me in Washington, but it happened to me when I was lending in Colorado, that those things are not always caught, so it may end up being, but most of the time, the reason for the environmental assessment and the cost of it to the borrower is to protect you from being able, from having something like that turn out. And the other thing is that sometimes properties surrounding you, not just on your property, might have something going on that could be drifting towards, and that, so we do a scan to make sure that there's nothing like that going on.
So, and some other things is, one of the first things you do as a lender when you start looking at the property is pull a preliminary title report, right? So it's basically it allows you to go in and look at things that have occurred on the property, both that have been historically recorded. So there could be easements that for maybe a future road, or there's easements for underground water lines or electrical lines overhead. And so, that's part of what comes up in
or covenants against, certain types of building. I mean, I've also seen that happen where it's not been something that would be allowed, and that the covenants from it being part of a subdivision way back when were attached to the property that, should you, and then it might be old and not really applicable anymore, but you want to get that off of your property before, so that nobody can sue you later.
So the other thing that comes up with property is you don't just need land, but you need water.
Yes.
And so when we talk about water, water districts, wells, surface water, irrigation, and irrigation districts and all that kind of thing. So talk a little bit about some of the things, Ransom, that you've seen regarding those issues and how and the importance of making sure you understand that.
Yeah, so for irrigated ground specifically, it's really important with the purchase sale to also have the water right for the actual water itself to be transferred to your ownership. We have had in the past people trying to separate that and then sell them separately, but that it doesn't really work for FSA that way, because you need the water to produce the crop. So that's important part of establishing the purchase sale. And then not always for FSA do you need accessible drinking water specifically. If you're not going to be living on the property, it's not really something that we look at. If you are going to live on the property and there's a house that might need a new well or some kind of other drinking water source, for FSA, because we're a government agency, we need to do a little bit more of a thorough environmental assessment, kind of similar to Craft 3. We usually visit the purchased property no matter what for every loan, and the loan officer does a quick environmental checklist. But if you're going to be digging below the plow line, which is about 18 inches underground, so for a well, for construction, any of that, you're going to easily add 3 to 6 months to the process because of that environmental review that we have to do. And so I kind of warn people if they need construction to like try to get other financing first, because I just closed a loan like the other month for a simple barn house, septic, and a well. And they had applied in January. So this took 10 months to close because of all of the environmental work that we had to do for it. We had to do like a survey and contact the tribe in that area and a few different tribes. And so there's just a lot of work that FSA does for construction that I kind of just push people away because the process takes a really long time. But if, yeah, you don't usually need a drinking water source for FSA because we do bare land. Sorry about that. Sorry about that. So yeah, I'll leave it at that. We don't run into a lot of water issues, but if you need irrigation, have the water right. And hopefully if you're going to buy property with a house already, it already has a good well or something for you. So.
Erika, what else? I mean, along water, talk about water,
Yeah.
especially in Western Washington where we are, where the farms are smaller, people are usually buying land with structures on it, and talk about water.
You know, fortunately, I haven't personally run into the problem in loans that I've done, but I know of situations that, you know, through Jefferson LandWorks, for example, where we've learned, you know, after the fact that the water right, especially if the land has not been farmed actively for a long time, that the farmer is working to purchase or lease property that has been fallow for a while, that you know, it's complicated getting that water right renewed, and may not be available to you anymore because of, you know, the growing restrictions on our water sources here, especially in Western Washington. So yeah.
So some things I'll add to that is with water, you know, when you think about wells, you know, is your well, if there's a well on the property, is it considered a domestic well only, or is it considered, is it considered an agricultural well so that you can use it for crops and that sort of thing? You know, what's the status of that well? Water districts, are you part of a water district? And what is your allotment and what is your price? Because you have to figure that in.
Right.
What's the seniority in that water district for times in drought and other situations? And so those are some of the things that come up. Surface water, what is your right to surface water? How much do you have to leave? Those sort of things. And again, regarding droughts and other things, spring water is another one. We see a lot here in Western Washington. And the other thing I would add to water is, you know, if you're doing crops and you're thinking about packing, a wash shed and packing. So what is the quality of the water, and how does it need to be, you know, what rating or classification of water do you need for various activities you're going to have on your farm?
Right. For that matter, your wastewater too. I mean, what else are you doing on the property, maybe as far as additional production or value add that might generate wastewater that has to be dealt with, that might be, depending on where you are, very costly.
So one last thing I want to talk about the property, and again, this goes back into the enterprise budgets and the projections that somebody puts in there. Somebody comes in and looks at a piece of property. Well, there's going to be repairs if you're buying an old ranch, like I did, mending old fences, repairing barns, bringing structures back up to workable standards. So there's three components of financing when you're buying land. One is the actual purchase price of the land. The second is repairs and maintenance and upgrades, right? So that could be huge in some of these operations. And the third is working capital to cover operating losses until you become profitable.
Right.
Talk about, from your perspectives from FSA and from Craft 3, how much that do you finance, taking all that into consideration and thinking about the need for outside capital to help support those things. Erika, start us off on that, those two components.
Yeah, thanks for that. Yeah, I mean, we will, when you apply for a loan, we don't just, evaluate, okay, this is the loan amount, and we're just going to decide whether or not there's enough cash flow to pay off the loan amount. And we are going to look at the overall project and because we know that there'll be more costs, as Mark said. So we're looking, so your project budget, you might be applying for, a $500,000 loan, but your project budget, total all in might be 700,000 when you add in investments to the property and working capital needs. And so we can Craft 3 has the flexibility to finance any one of those components, or additional equipment. But we will look at, how much equity the person is bringing to the picture, not just as sort of like, what is skin in the game, but also just, it's so much more, you're going to have such a greater chance of success if you don't have debt, if you can reduce the amount that you're borrowing up front. And so we'd like to see other sources come in, maybe grant funds or, our some partnering with the NODC or on getting an RBDG grant for investments needed on your property, or friends and family, that kind of thing. But I guess maybe I should stop there and ask if I'm on the right track in answering your question.
A little bit, yeah. I mean, because part of it is you have the land purchase, you have the infrastructure purchase that has to go on over a period of time,
right?
And you have operating losses probably for a while. So, I mean, the budget is bigger than just the land purchase, as you mentioned, exactly, Erika. So, and all that's got to be taken into consideration. And if it's any of the additional is debt for infrastructure, equipment, working capital, that's all got to be figured into the payment also, right? And so, right. So Ransom, how do you work also in those other issues in addition to just the land purchase?
Right. So on an FSA application, there's two spots. There's one loan spot and there's one right below it. And so if someone needs infrastructure or operating capital to start out with, along with the land purchase, that's where you put it. So any person can borrow up to $600,000 for land and up to $400,000 for operating. And that can include equipment purchases, infrastructure materials, and like regular operating costs like seed, chemical, gas. All of that can be paid for with FSA funds directly. It's just when we look at that enterprise budget, the initial year that they bought land and have all this debt load, that can show a negative margin as long as their ending capital is positive. So if they have enough starting cash to end the year on a positive note, they can still have like negative cash flow from the farm that first year. But for FSA, we actually have to show in a typical year. So, they've bought the land, they've operated a year. The next year, a typical year, they have to show both positive ending capital and positive like margin after debt servicing. So they need to generate enough farm income for their expenses, along with that debt load, and at the end of that year have positive cash on hand. We have to be able to show that. And so we can't really show negative like cash flow in a typical year, or else that's when we kind of draw that line. Well, maybe this purchase won't be feasible, and you have to lessen your expenses in some ways, or maybe not purchase as much infrastructure materials and like work on increasing the profitability there. So we do look at those things, and you can directly receive funds for like the whole farm, whatever you would need to get going.
Cool.
Yeah.
I didn't realize that FSA could do that. That's great. That's great.
Yeah. It's just for buying land that we need to see that production history. So for an operating loan, just to buy equipment or for costs, we just need to see 1 year of actuals. So if they have a lease for 3 years, they have 1 year under their belt, they can come to us for an operating loan for that year's expenses, gas, fertilizer, all of that.
Wow. Okay.
Erika, any final thoughts on that question?
Well, actually, well, two things I just wanted to offer that first, if we work on your project budget and determine that, you would have to borrow more than you can support in the near term in order to complete all your investments needed on the property, we'd want to evaluate whether scaling back those investments is feasible, because sometimes it's not, because that's going to impact what you can produce or how what you're able to generate market. So it's like a big complicated Rubik's cube. So, but we can certainly look at that together. But I question for Ransom, like, so if in an instance where perhaps Craft 3 helps a farmer with less than 3 years of operating experience get onto a property, and some investments were needed on that property, if that farmer had 1 year at least of experience, would that be something that FSA could finance side by side with Craft? Like if we were
going to provide the other,
the acquisition loan, does that, or do you not, I mean, do you play well with others, I guess, or do you like
definitely, most definitely. So the Farm Service Agency, we're a government agency, so we're really here to help the farmers that can't get commercial financing. So working with Craft 3, if they qualify for Craft 3's loans, FSA is like, well, you qualify for someone else, go with someone else, mostly because if you can qualify for a commercial lender, we're not here to compete with the commercial agriculture industry. We're here to kind of help subsidize starting farmers, or farmers that were rejected by a bank and can't get financing elsewhere. But we do play with others very well. We have a participation loan program and a beginning farmer down payment program. Those two programs are fun because we can help finance part of a purchase property. A lot of times someone might have one FSA loan with us already ready, and that eats into the $600,000 amount that I had mentioned earlier. Maybe they can only borrow $300,000, and the other bank comes in with the other half, or maybe more than half or less than half. We've had a bunch of different setups, and the bank in that situation always gets first lien on the property, even if their investment is less than FSA's. So we do work really well with others, and we have quite a list of lenders that we participate with in this way. And then the other side of that is the down payment program for beginning farmers. This still uses another lender. However, the farmer has to come in with 5% down, and they have to be considered a beginning farmer to USDA. So someone who has farmed for less than 10 years, considered beginning farmer, so long as they don't own land already more than the average for their county, they're considered beginning farmer. and they would have to get that other lender on board who would do 50% of the purchase, and then FSA would do that remaining 45%. So borrower comes in with some cash down, and then FSA kind of does a little less than half, and the other lender does half. So we do work quite well with a bunch of different lenders here in the Northwest. And we've had quite a few participation loans with the larger loan amount. So like FSA doing 600,000 and the other lender did another 600,000. And that way you can grab onto a lot more land than just with 600,000 on its own. So yeah, we do play well with others.
Got it.
That was a great way to talk about some of your programs and different things. Erika, I'm going to have you just finish on some thoughts about Craft 3 and what you can do, and then I'm going to ask.
Oh yeah, so we're out of time. Oh my gosh. Okay, yeah.
That's all right.
Okay, Craft 3 as a nonprofit lender, we are not a bank, and so we don't have we craft all our loans. We use the same underwriting tools to evaluate the feasibility of a loan and lending to a borrower, but we don't have strict guidelines like minimum credit scores or maximum LTVs and stuff like that. So we literally craft our loans. And so summarizing our products is a little bit tough, though I did provide a link for Craft 3's food and agriculture focus to give a broad spectrum or perspective on what we can do. But best thing to do is talk to one of us.
So there's one last question that came up. What if there was no water right associated with the property, but there is a well? Would the lack of that water right, I don't know if that's for other water rights other than the well. I guess from a lender's perspective, you need to know that there is a legal water source for that property to irrigate those crops or the livestock. So I think the real issue is that well listed with Department of Ecology? Does it have a historical water use? Can it be used for those purposes?
Its condition.
And the condition of that well and that water. So I mean, it's one thing is, maybe take that risk as a farmer, but when you're putting a lender's capital at risk, those are the kind of questions that really need to be answered in order to get a lender on board, right? That, along with many other things, are like that too. It's not just water, but it's that sort of risk. Okay, any closing thoughts, Erika, Ransom, that you want to say as we wrap up here? I guess I just make sure you're keeping records about your existing operations, so you can, no matter how simple they are, so you can, prove your track record, and and a business plan does not have to be scary. I guess it's sort of putting down your thoughts, and it doesn't have to be a 50-page document, just something to help us understand what your plans are, so we can help you by communicating that to our group. Maybe I'll end with that. Ransom, anything?
Yeah, I provided a couple links. One of them is to the general FSA loan guidebook, and so it kind of goes over how to apply, what all the information you need, the types of loans available. And I also included a link to a USDA locator. So every county in Washington State has a government agency office with Farm Service Agency presence, or NRCS or rural development. And getting in touch with your county office is great if you have a farm, because there's actually quite a few farm programs where if you sign up, you can actually potentially get a farm program payment, and that's usually based on your operation already. And so it's kind of like free government money. Definitely contact your local county office. And so that link I provided sends you to your nearest county office. And if you want to get an FSA loan, you would contact them first, because there's about 8 offices in Washington State that process loans. And so if you're in Clallam County, you're going to be speaking with someone else, not me, because I operate with Spokane, the Spokane area. And so, yeah, if you're looking to apply, go to that locator link and find the nearest office to you. So that's what I would say.
All right. So with that, Kelly, I'm going to turn it over to you for closing comments and when people will find this and the links.
Sounds good. Thanks, everybody. So the links that Erika and Ransom are referring to will be included in a follow-up resource guide document that will be sent out to all of the participants who attended today, as well as the recording of this webinar, and the resource guide will live on our WSU Extension online learning library website. So keep an eye out in your inbox for that follow-up information, as well as the webinar evaluation form. I popped in the chat, but we'd love your feedback. So thank you everyone for attending today, and such a great webinar full of fantastic information. So thank you.
Yeah, thanks for having
All
us.
right, great. Thank you, Erika. Thank you,
Great job.
Ransom. All right.
Thank you.